The government passed a law. They didn't send you a letter. They didn't run a public announcement. They didn't call you. They simply made it available, and then they waited to see how many Americans over 50 to 60 would keep paying bills they no longer legally owed. Right now, as you are watching this, millions of seniors across this country are writing checks every single month for obligations that were quietly removed. Some of them years ago, some of them very recently, and in almost every case, the senior had absolutely no idea. Property tax bills on homes they have owned for 30 years. Federal income taxes on Social Security checks they earned through 4 decades of hard work. Medicare premiums being pulled silently from their payments month after month after month. Energy bills, they assumed, were non-negotiable. Prescription costs, they believed, were simply the price of getting older. And the number that should genuinely stop you cold, according to AARP, out of the more than 9 million seniors who legally qualify for just one of these exemptions, only about 8% have ever actually claimed it. That means for every 10 seniors watching this right now, 9 of them are still paying bills that someone in Washington already decided they don't owe. This is not a glitch. This is not an accident. The system was never designed to come to you. It was designed to wait. And if you never ask, it keeps collecting. There are 5 specific bills, verified, legal, real, that millions of American seniors are paying right now when they are either fully or partially exempt. By the time this video ends, you will know exactly which ones, exactly who qualifies, and exactly what to do about each of them. The first bill, your monthly Medicare Part B premium. Every single month, Medicare reaches directly into your Social Security payment and pulls out a premium before you ever see a dollar. In 2026, that standard Medicare Part B premium is $202.90 per month. For a married couple, both on Medicare, that is over $400 disappearing from your combined income every single month before you pay a single other bill. Most seniors accept this without question. They assume it is fixed. They assume it is non-negotiable. They assume there is simply nothing to be done. What they do not know is that there is a federal program operating right now that will pay that entire premium for you every month directly through your state Medicaid office. It is called the Medicare Savings Program, and it comes in 3 tiers depending on your income. The first and most comprehensive tier is called QMB, the Qualified Medicare Beneficiary Program. If you qualify, it does not just eliminate your Part B premium. It covers your Part A premium if applicable, your deductibles, your co-payments, and your co-insurance. According to Medicare.gov directly, QMB recipients also pay no more than $12.65 for each covered prescription drug under Medicare Part D in 2026. To qualify for QMB, your monthly income must be under $1,350 as a single person or under $1,824 as a married couple. Resource limits for 2026 are $9,950 for individuals and $14,910 for couples. If your income runs slightly higher than those numbers, 2 additional tiers, called SLMB and QI, will still cover your Part B premium completely. The SLMB income limit for a single person is up to $1,616 per month. The QI program extends that even further. And here is what makes this particularly serious. Millions of seniors who qualify for these programs are not enrolled. Not because they were denied. Not because they applied and were turned away. Simply because they never knew to apply. Nobody enrolled them automatically. Nobody from Medicare called and said the program exists. The application process runs through your state Medicaid office. You can start today by calling 1-800-MEDICARE or visiting Medicare.gov. Ask specifically about the Medicare Savings Program and which tier you may qualify for. That one call could put over $2,400 back in your household this year alone. The second bill, prescription drug costs. A lot of people hear Medicare Part D and think they are covered. They assume having a drug plan means their prescription costs are handled. Having a plan and having protection are 2 completely different things. There is a separate federal program called Extra Help, also referred to as the Low-Income Subsidy, and if you qualify, your prescription situation looks almost unrecognizable compared to what most seniors are paying. No Part D premium. No annual deductible. And the most you can ever pay for a covered medication under Extra Help is $12.65 for a brand-name drug or $4.50 for a generic per prescription in 2026, according to Medicare.gov. That is not an estimate. That is the federally established ceiling. Compare that to what seniors without this program pay. $50, $80, in some cases over $100 per month for a single medication. Many seniors are managing 4, 5, or 6 prescriptions simultaneously. The income eligibility threshold for extra help in 2026 is approximately $23,000 per year for a single person. For a married couple, it is approximately $31,000. These limits are broader than most people assume, and they cover a substantial portion of American retirees living primarily on Social Security. And here is something almost nobody mentions. If you are already approved for any of the Medicare Savings Program tiers described above, QMB, SLMB, or QI, you are automatically enrolled in Extra Help. No separate application required. It activates on its own. If you have not done either yet, you can apply through Social Security at ssa.gov or by calling 1-800-772-1213. The seniors who are paying the least for their medications are not doing anything complicated. They simply applied for a program that was already waiting for them. The third bill, your heating and cooling costs. Energy costs in America right now are not a minor inconvenience. They are a genuine financial emergency for anyone living on a fixed income. According to the National Energy Assistance Directors Association, home heating costs in 2026 are outpacing inflation by nearly triple. Families using electricity to heat their homes are facing a price increase of over 12% compared to last year. Natural gas households are seeing increases of more than 8%. For a retired American on a fixed Social Security income, those numbers are not statistics. They are a direct monthly threat to financial stability. What most seniors do not know is that there is a federal program called LIHEAP, the Low Income Home Energy Assistance Program, that makes payments directly to your utility company on your behalf. Not a coupon. Not a percentage discount. An actual grant payment sent to your gas or electric provider so your bill is reduced or covered. The federal income limit for LIHEAP is set at 150% of the federal poverty guideline. For a single person, that is roughly $22,000 annually or less. For a two-person household, the limit is higher. And importantly, some states set their own limits even above the federal floor, meaning eligibility in your state may extend further than the federal baseline. Here is what matters specifically for seniors. According to LIHEAP program guidelines, households with a member aged 60 or older receive priority access. In many states, seniors can apply a full month before the general public enrollment opens. That distinction is critical, because LIHEAP funding is finite. When the money runs out for the year, it is gone. Seniors who apply early get served. Seniors who wait often don't. There is also a connected program called the Weatherization Assistance Program that will send a contractor to your home, assess your insulation, seal drafts, and in some cases repair or fully replace your heating system, all at no cost, in a way that permanently lowers your energy bills long term. To find your local LIHEAP office and apply, call 211. That is the National Social Services line available in every state. They will connect you directly to the program in your area. The fourth bill, the Medicare Surcharge, almost nobody knows they're paying. This one is different from the others. This is not a program most people have ignored. This is a charge most people do not even know is being taken from them. It is called IRMAA, the Income-Related Monthly Adjustment Amount. If your reported income from 2 years ago crossed certain thresholds, Medicare does not charge you the standard Part B rate. It charges you significantly more. Depending on your income bracket, that surcharge in 2026 can push your total monthly Part B cost anywhere from $284 to $628 per month, pulled directly from your Social Security payment without a separate notice. Many seniors see a smaller Social Security deposit and simply assume that is the normal amount. They never question it. They never investigate it. The money disappears and life continues. But here is what makes this deeply unfair for retirees specifically. Medicare uses your tax return from 2 years prior to calculate your current premium. Which means if you retired last year, sold a property, did a Roth conversion, or had any kind of one-time income event that temporarily elevated your earnings, You could be paying a massive surcharge right now based on money you no longer earn and will never earn again. And the correction almost nobody takes advantage of. You can appeal it. There is a specific form, SSA 44, that exists precisely for this situation. It is called the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form. If you have experienced retirement, a significant reduction in income, the loss of a spouse, or any major income-changing life event, you file this form with documentation of your current income. Social Security reviews it. If approved, your surcharge is reduced or eliminated, and the correction is applied going forward. People are recovering $200, $300, even $400 per month through this single form. You can download SSA 44 directly at ssa.gov or pick it up at any Social Security Administration office. If you are currently on Medicare and you experienced any major income change in the last 2 years, check your monthly Part B cost. If it is significantly higher than the standard rate, this form may be the most valuable single page you file this year. The fifth bill. Property taxes on a home you already own. If you are 65 or older and you own your home, think carefully about the last time your county sent you any communication explaining your rights as a senior homeowner when it comes to property taxes. For the overwhelming majority of seniors watching this right now, that letter never came. And yet nearly every state in the country has senior property tax exemptions, assessment freezes, circuit breaker credits, or deferral programs that can dramatically reduce what you legally owe on a home you have already spent decades paying for. The numbers are real and they are significant. In Alaska, homeowners 65 and older are exempt from taxes on the first $150,000 of their home's assessed value. In Florida, seniors 65 and older qualify for exemptions up to $50,000. In Colorado, senior homeowners are exempt from taxes on 50% of the first $200,000 in home value. Alabama exempts qualifying senior homeowners at the state level entirely. Kentucky's exemption covers $49,100 of assessed value. In Iowa, the exemption is $6,500. Georgia provides a $4,000 exemption from county taxes for qualifying seniors. 5 states, Arizona, Arkansas, Louisiana, Oklahoma, and Idaho, offer full property tax freezes, legally locking your tax bill so it cannot increase regardless of how much home values rise around you. In Ohio, legislation passed in recent years now provides seniors aged 65 and older who have lived in their homes for 25 years or more an exemption worth up to $250,000 on their property's assessed value. Texas voters approved expanded senior homestead exemptions in late 2025, meaning thousands of Texas seniors are entering 2026 with lower obligations that many have not yet claimed. And the pattern is identical in every single state. These exemptions do not apply automatically. They are not activated when you turn 65. Nobody from your county assessor's office calls to tell you they exist. The bill arrives. You pay it. And every year that passes without filing your exemption is a year that money is gone permanently. The process in most states takes one application, proof of age, proof of residency, and in some cases proof of income. That is it. And once approved, the savings follow you for as long as you own that home and continue to qualify. Go to your county assessor's official website today. Search your county name and the words Senior Property Tax Exemption. Or call them directly and ask what programs exist for homeowners 65 and older in your area. One phone call. One application. Potentially thousands of dollars in savings every single year for the rest of the time you own your home. Here is the uncomfortable truth behind everything you just heard. None of this is hidden in the sense that it was buried or made illegal to discuss. These programs are real. They are funded. They are operational. The laws are on the books. What is hidden is the expectation that you will find them on your own. The system does not proactively notify you when you become eligible. It does not mail you an application when you turn 65. It does not alert you when a new exemption passes that applies to your situation. It simply makes the programs available and waits. The seniors paying significantly less than their neighbors every single month are not smarter. They are not wealthier. They are not connected to anyone with special access. They simply applied. Medicare premium assistance that covers $202.90 a month. Prescription drug costs are capped at a few dollars per fill. Energy bills paid directly by a federal grant. A Medicare surcharge was removed through a single form. Property taxes reduced or frozen on a home they have owned for decades. 5 separate areas where the government has already ruled in your favor. The only question that remains is how much longer you are going to keep paying for something you were already told you don't owe. This video is for educational and informational purposes only and does not constitute financial, tax, legal, or medical advice. Individual eligibility varies based on income, location, and personal circumstances. Always consult a licensed financial advisor, CPA, or qualified benefits counselor before making financial decisions.